Did you know that over 90% of investors fail to beat the market with their picks? The secret to long-term wealth isn't chasing the latest trends or timing the market. It's investing in the right ETFs you can hold forever. These proven funds have the power to grow your wealth steadily, without constant monitoring or stress. If you're serious about building a secure financial future and want to avoid costly mistakes, this video is packed with the top 5 ETFs that are perfect for buy and hold investors. Like and subscribe to stay ahead of the game, because understanding these picks could be the difference between financial freedom and ongoing frustration. Now, let me show you why this is so urgent and what you need to know before getting started. Welcome to our guide on the 5 best ETFs to buy and hold forever. In this video, we'll explore the top exchange-traded funds that can serve as the foundation of your long-term investment portfolio. Whether you're a beginner just starting out or someone looking to refine your approach, understanding these options is crucial for building lasting wealth. Right now, in the context of the U.S. economy, it's more important than ever to focus on reliable, proven investment strategies. With market volatility and economic uncertainties, many investors are realizing that trying to time the market or chase trends often leads to frustration and losses. Instead, investing in the right ETFs, funds that track broad, stable indices, can provide steady growth over time with less stress and active management. By the end of this video, you'll walk away with a clear understanding of which 5 ETFs are best suited for buy and hold investors. You'll learn why these funds are proven to outperform most individual stocks over the long run and how they can help secure your financial future. But to make smart decisions, you first need to understand the economic landscape we're dealing with. In today's economic landscape, understanding the macro environment is crucial for long-term investing success. Currently, the U.S. economy faces a delicate balance of factors that influence the best choices for buy and hold investors. According to the Federal Reserve, interest rates have been rising steadily over the past year, with the federal funds rate increasing from near zero to around 5.25%, aiming to curb inflation without tipping the economy into recession. This tightening cycle impacts borrowing costs, consumer spending, and business investment, all of which influence market stability. Inflation remains a key concern. The Bureau of Labor Statistics reports that the Consumer Price Index has hovered around 3.2% in recent months, down from double digits last year, but still above the Fed's 2% target. This persistent inflation erodes purchasing power and makes certain asset classes more attractive for preservation and growth. Housing markets are also shifting. Data from the Federal Reserve's flow of funds shows a slowdown in home price appreciation, reflecting higher mortgage rates and increased affordability challenges. These cycles can influence the broader market, as real estate often acts as both an investment and a hedge against inflation. Tax policies and regulatory changes continue to evolve, affecting investment returns and the attractiveness of various sectors. Meanwhile, market cycles, marked by periods of expansion and contraction, highlight the importance of stability and diversification. Given these macroeconomic conditions, selecting ETFs that offer broad exposure, resilience, and consistent growth becomes even more vital. With that context in mind, let's break down the strategy you can actually apply. Investing for the long term is a simple but powerful way to build wealth over time. The core idea is to buy a set of reliable, well-diversified investments and hold on to them for many years, regardless of short-term market ups and downs. This approach is called buy and hold investing. One of the easiest ways to do this is through exchange-traded funds, or ETFs. Think of ETFs as baskets of many different stocks or bonds packaged into a single investment. When you buy an ETF, you're essentially buying a small piece of a large group of companies or assets, which helps spread out your risk. The process starts with choosing the right ETFs that match your financial goals and risk tolerance. You then buy these ETFs through a brokerage account, similar to how you would purchase stocks. Once you own them, the key is to stay patient and avoid reacting to every market fluctuation. Over time, the value of your ETFs should grow, especially if the companies or assets inside them perform well. Key terms to understand are diversification, which reduces risk by spreading investments, compounding, where your investments generate more money over time, and resilience, meaning your portfolio can withstand market ups and downs. The main strategy here is to focus on steady growth through long-term holding, avoiding the temptation to buy and sell based on short-term market changes. This helps you stay disciplined and benefit from the overall upward trend of the markets. Now, let's look at a real-world example to see exactly how this plays out in practice. Imagine you decide to invest in the Vanguard Total Stock Market ETF, ticker VTI, as part of your long-term buy and hold strategy. You start with an initial investment of $10,000, purchasing approximately 150 shares at $67 per share. Over the next 20 years, historical averages suggest an annual return of about 7%, adjusted for inflation. Let's calculate the growth. Using a compound interest formula, your investment could grow to roughly $38,000. If you keep contributing $500 monthly, your total contributions over 20 years would be $120,000. With the same 7% average return, your portfolio could grow to over $250,000, thanks to the power of consistent investing and compounding. Now, imagine you also consider buying a home. Using Zillow's mortgage calculator, a $300,000 house with a 30-year fixed mortgage of 4% interest would cost roughly $1,430 monthly. If you decide to rent out a part of the property, generating an extra $300 a month, your effective mortgage payment drops, improving your cash flow and helping you build equity over time. This example illustrates how disciplined investing in ETFs combined with strategic property management can accelerate your wealth building. Remember, the key is staying consistent and avoiding emotional reactions to market fluctuations. This looks great, but only if you avoid the common traps that ruin deals like this. Investing in ETFs with a buy and hold mindset can be a powerful way to build wealth over time, but even seasoned investors can fall into common pitfalls. First, one of the biggest mistakes is chasing hot stocks or trendy ETFs without proper research. I've seen investors jump in because they heard about a fund's recent surge, only to see their gains evaporate when the market shifts. The key is to stick to proven, diversified ETFs and do your due diligence before investing. Another common error is ignoring the importance of asset allocation. Some investors put all their money into one sector or ETF, thinking it will outperform. But over time, lack of diversification can expose you to unnecessary risk. It's essential to balance your portfolio across different asset classes, sectors, and geographic regions to weather market fluctuations. A third mistake is neglecting to review and rebalance your portfolio regularly. Life changes, markets move, and what was a balanced investment plan in the beginning might need adjustments. I've seen investors hold onto the same allocations for years, missing out on opportunities or exposing themselves to risk. Setting a quarterly or annual review helps keep your investments aligned with your goals. Finally, many overlook the importance of low-cost ETFs. Paying high fees erodes your returns over decades. Choosing funds with low expense ratios ensures more of your money works for you rather than going to management fees. To avoid those mistakes, here are the best tools and resources available right now. Looking to build wealth with a simple, long-term investment strategy? Here are the 5 best ETFs to buy and hold forever. These ETFs offer broad diversification, low costs, and reliable growth, making them ideal for any investor focused on wealth accumulation over time. First, consider the Vanguard Total Stock Market ETF, VTI. It provides exposure to the entire U.S. stock market, including small, mid, and large cap stocks. Its low expense ratio helps preserve your returns. Next, the Vanguard FTSE All-World ex-US ETF, VU, offers global diversification outside the U.S., giving you access to developed and emerging markets. For bond exposure, the iShares Core U.S. Aggregate Bond ETF, AGEG, adds stability and income to your portfolio. Another excellent choice is the Vanguard Real Estate ETF, VNQ, which invests in real estate investment trusts, providing income and diversification. Lastly, the iShares MSCI Emerging Markets ETF, EM, captures growth opportunities in developing economies, balancing risk and reward. To manage and track these investments, consider platforms like Fidelity or Charles Schwab, both offering commission-free ETF trades and user-friendly interfaces. For research and educational resources, sites like Investopedia and Morningstar provide insights into ETF performance and strategies. If you're interested in real estate, Redfin offers tools for property analysis and market trends. Now that you've got the tools, let's talk about the first thing you could do today to get started: setting up a brokerage account with one of these platforms and beginning your automated investment plan. Small steps today can lead to a lifetime of financial security. Imagine building your wealth steadily over time with a simple, reliable plan. Today, your first step is easy and powerful. Download a trusted investment app or platform, like Fidelity or Charles Schwab, and explore their beginner guides. This small action opens the door to managing your investments from anywhere, making it easier to stay on track. Taking this step today helps you understand your options, reduces uncertainty, and sets the foundation for future financial growth. Once you have the app, you can start by checking your credit score or listing your monthly expenses. These simple tasks give you a clear picture of your financial situation, helping you set realistic goals. By doing this now, you're creating momentum. Small, consistent actions build confidence and make the bigger goal of long-term wealth more achievable. Remember, investing isn't about perfect timing. It's about taking manageable steps and staying committed. Long-term success begins with that first move. Imagine how, years from now, your disciplined approach could grow your savings, generate passive income, and secure your financial future. Taking that first step today is how every great journey begins. Let's start building your path to lasting wealth, one small, realistic action at a time. Imagine yourself 30 years from now, looking back at the choices you made today. With consistent investing in the right ETFs, that future could be a reality. Think about the power of steady contributions and long-term growth. By choosing a diversified set of ETFs, perhaps focusing on broad market, technology, healthcare, or international funds, you set yourself up for compounding wealth over time. If you start today by investing just $500 a month into these ETFs, with an average annual return of around 7%, your investment could grow significantly. Over 3 decades, that consistent effort might result in over $300,000, turning small, regular contributions into a substantial nest egg. Imagine owning multiple income-generating assets, like 5 cash-flowing properties, by 2035, all built through disciplined, long-term investing. This isn't about chasing quick wins, but about embracing the power of consistency. The real magic happens when you stay committed, avoid emotional reactions to market fluctuations, and let time do its work. The ETFs you choose today can become the foundation of your financial freedom tomorrow. And now that you see what's possible, here's how we wrap this up and take action. Start by researching the best ETFs for your goals. Set a monthly investing schedule and commit to the journey. Small steps today can lead to a future of financial security and independence. The key is to begin now, with patience and persistence. Remember, the key to building lasting wealth is choosing solid ETFs, staying disciplined, and thinking long-term. Today, we've covered the 5 best ETFs to buy and hold forever, diversified, reliable, and designed to grow with you over time. Thanks for sticking with me on this journey toward financial freedom. I'm excited to see your progress. Now, I want to hear from you. What's your first financial goal for this year? Drop your answer in the comments below, and don't forget to like and subscribe for more tips on building your wealth. If you enjoyed this video, check out my playlist on passive income strategies. Link is right here. Remember, consistent action and patience are your best friends on the path to financial independence. Stay focused, stay confident, and I'll see you in the next one.